The leak wasn't supposed to change the markets, but it did. Because when the Epstein Files hit daylight, the first thing that moved wasn't justice, it was money. Quiet transfers, sudden sell orders, accounts frozen. The elite didn't argue, they repositioned. That's the part the headlines missed. Not who was named, but what those names were connected to. Offshore trusts, hedge networks, political donors doubling as financial gatekeepers. And if you think these leaks don't affect your portfolio, you're already behind the trade. This isn't just a scandal. It's a signal. A signal investors ignore before election years, every single time. So let's decode it. 5 red flags smart money already sees before the 2026 elections do. When the documents first dropped, mainstream narratives ran wild. Names, photos, connections. But behind the noise, the data told another story of how money behaves when reputation is at risk. Whenever power's curtains are pulled back, liquidity vanishes. It doesn't argue, it doesn't wait, it moves. And that's exactly what happened this time too. Watch the charts around the dates of the leaks, capital outflows, hedge realignments, subtle offshore movements. A silent panic dressed in technical wording. They called it strategic rebalancing. But let's be honest, when money runs before regulation knocks, it's not strategy, it's survival. That's red flag number 1, capital flight disguised as market rotation. From late 2025 onwards, the pattern was unmistakable. Record outflows from blue-chip ETFs, banks quietly shifting dollar exposure to cross-border entities. Public language said diversification. Private memos said containment. The smartest investors didn't react to the leak, they anticipated it. Which brings us to why this matters right now. 2026 isn't just another election year, it's an audit of trust. Markets don't just respond to policy, they price confidence. When institutions that shape policy are suddenly linked to global finance and dark networks, capital doesn't wait for ballots. It finds exits first, while retail investors are still reading headlines. The uncomfortable truth? Every election season since the 1980s shows the same curve. A quiet liquidity pullback 6 to 8 months before the vote. But this time, the pullback began a year early. Why? Because exposure doesn't need law to trigger panic. It only needs credibility loss. And that's something no central bank can print. Here's red flag number 2, regulatory theater. You'll see aggressive sound bites, televised hearings, new committees for transparency. But that's the performance layer of capitalism. The audience claps. Backstage, the same hands exchange funds. The deeper irony? Each wave of scandal breeds stronger optics, not stronger oversight. Compliance becomes branding. The illusion of transparency becomes the product itself. Money loves spectacle. It hides beautifully behind chaos. If you've watched markets through the Panama Papers, Cambridge Analytica, or even FTX, you'll know every political event that promises change usually ends with the system learning how to disguise itself better. What happens next is what I call reputation laundering. Funds start renaming, repivoting, reopening under new ESG-sounding titles. Old executives quietly resign, then reappear 6 months later under subsidiaries with clean sheets. That's the real game. Not reform, rebrand. And that wraps directly into red flag number 3, the illusion of moral money. Investing used to be about returns. Now it's about virtue. Funds use moral language: green, ethical, sustainable. But peel back their holdings and you'll often find fossil majors, defense tech, private equity giants, or lobbying-linked conglomerates. The new financial trick isn't to hide money. It's to sanitize perception. Many retail investors think they're funding progress. In reality, they're funding old power under softer colors. And the irony? Some of the same foundations exposed in the Epstein network are key LPs, limited partners, and flagship impact portfolios. So where's the moral line when the same institutions manage both shadow trusts and ethical ETFs? Answer: it's not a line. It's a marketing slogan. Now, quick pause. We've been dissecting institutional power for a bit, and if you're still here, you're clearly not just scrolling through headlines. You're the kind of person who connects dots before they're printed. So let's test your instincts. What's the biggest financial red flag you've personally ignored and realized too late? Tell me below. I read every one. And if you want to track how capital actually moves before election years, subscribe. Not for hype, but because the data we'll follow next could shape how you invest when trust collapses again. All right, back in. Red flag number 4, the shadow dollar. Here's the invisible economy nobody talks about on mainstream panels. When controversies erupt, liquidity doesn't die. It migrates. And it almost always migrates into shadow systems, jurisdictions, or instruments that regulators can't easily see. Late 2025, offshore USD deposits jumped 22%. Crypto whales converted stablecoin holdings into sovereign debt proxies. Private banks in Zurich and Singapore reported unusually timed portfolio consolidations. No official statements. No panic sell-offs on CNBC. Just quiet repositioning. If you've ever wondered why global markets don't crash after leaks like this, it's because the money never leaves. It simply changes names, owners, and time zones. That's how the wealthy stay liquid when systems leak, by preempting accountability. In essence, the shadow dollar is the new safe haven. Not gold, not crypto, not bonds, but an architecture of trust that moves faster than the law. And here's the final piece. Red flag number 5, the collapse of the trust premium. Modern finance isn't built on gold reserves or oil output. It's built on belief that every major actor, government, regulator, institution, is at least playing the same game. Leaks fracture that belief. They show overlap between private networks and public accountability, between offshore wealth and onshore power. Once that illusion cracks, the market stops acting rationally. Because prices aren't about math anymore, they're about confidence. When belief becomes variable, volatility becomes structural. That's when systems don't just correct, they unravel slowly. Not like a crash, like erosion. Let's zoom out. By the time you're watching this, the first quarter of 2026 is already setting the tone for a volatile year. Stock indices show minor optimism. Analysts say the market's priced in uncertainty. But behind-the-scenes liquidity data says the opposite. Funds are trimming, hedging, and widening their collateral. It's not panic. It's preparation. See, markets have learned to frame fear as stability. Every upbeat headline, every economic resilience quote, carefully placed confidence theater. But the behavior of capital tells a darker truth. The system no longer assumes it's in control of its own exposure. So what are the takeaways for an intelligent investor watching this? First, recognize that information shocks don't happen to the market. They're absorbed by the market, differently for insiders than outsiders. Second, watch not what people say after a scandal, but where money goes before it breaks publicly. Third, understand that trust is now a variable economy. You can't price it, but you can feel when it starts to evaporate. And that's where we stand heading into the 2026 elections. Power is nervous, capital is cautious, and exposure is accelerating faster than accountability. So the question that matters now isn't who's guilty. It's how do the guilty move their money when light hits the system? Because that's where the red flags live, not in the crime, but in the cover, not in what's stolen, but in what's suddenly silent. When the next major market contraction arrives, don't expect fireworks. Expect whispers. Expect missing data. Expect formality and emptiness. The next crisis won't start with a scandal. It'll start when too many people stop asking where the money went. And that's where we'll leave it for now. Because the biggest financial secret of 2026 isn't corruption, it's continuity. The system doesn't break when it's exposed. It adapts. So before the storm really begins, ask yourself, how prepared are you to see the signals before they hit the feed? Because sometimes The scariest thing in finance is what never makes the front page. Thank you guys. See you soon.